So you want to buy a home in the $1 million price range? Buying a home in this price range can be an intimidating process. Have no worries, we're here to help break it down in a few simple steps that anyone can follow. From determining your budget to finding the right location, to understanding the negotiation process, or even finding the right mortgage that fits your budget. We cover everything you need to know to make your dream of owning $1 million house a reality. So don't let the high price tag hold you back. Tune into this video and learn how to buy $1 million house with confidence. Let's get started. I'm Shane Gillen, and welcome back to the channel where I help you live your best life in Newport Beach. We continue our loan program series with our amazing guest, Mina from Guaranteed Rate. Mina is one of the top 1% mortgage originators in America. She's also on the list of top producers for the country in the Scotsman's Guide for 2022. So Mina, what are some of the basics that people need to know about types of loans in the $1 million price point?
Yeah, so first off, thank you for the kind introduction. But yeah, I guess the basics are the fact that, thankfully in higher cost areas with conventional loan financing that allows you to put much lower down payments, the loan limits for 2022 is all the way up to $1,089,000, which means that you could actually buy $1 million or $1.1 million property with as little as 5% down. I think a lot of people don't realize that. So it's definitely not true that you need a full 20% down payment to buy a house. But even with the lower down payment options, in terms of qualifying and the basics of it, the main thing that the lenders and the banks are going to look for is that debt to income ratio calculation. Now, most programs will allow you to go up to 50%, which basically means whatever your gross monthly income is, divide that by 50%. That's the max amount the mortgage payment of the home you're buying, plus any current debt obligations you already have. All of that total together cannot exceed that 50% mark.
Okay, so you can do 5% down loan on a conventional loan, which is almost 1.1, as you said, here in Orange County. What about FHA financing?
And FHA financing, the loan limits are actually the same since they follow the FHFA. So essentially with FHA loans, you can go as little as 3.5% down. And depending on your credit score situation, I would probably recommend one program over another. Because, for example, in the topic of mortgage insurance that many people are very fearful of, a 5% down, let's say conventional loan, assuming you have two people on the loan with fairly good credit scores, the mortgage insurance payments are really not that scary. It actually amounts to about $135 a month with conventional.
Okay.
FHA loans, a little bit different. So FHA loans are really beneficial for anybody with some credit blemishes since they don't really actually care about the lower credit scores as much as conventional does. So it's a fixed percentage for mortgage insurance across the board. And for the same scenario, 5% down, $1 million property with an FHA loan, the mortgage insurance payments would be roughly about $590 a month. So For a good credit score borrower, definitely I would recommend conventional over FHA for that reason.
Yeah, for sure. What about fees? Are there any fees involved in this $1 million price point?
Yeah, with the $1 million price point, unfortunately, everything in life, there's some kind of cost associated when purchasing anything. But when buying a house, I typically recommend just to budget and prepare about 2% of the purchase price. And that's going to cover closing costs, prepaid items, not even transactional costs, but you have to prepaid things like insurance, prepaid interest, sometimes taxes. But anyway, everything combined, I would recommend to budget 2% or $20,000, and you can at least rest at night knowing that you have more than enough budgeted for.
Yeah, absolutely. What about types of homes? You know, some people, a condo or a single family, or what about even multi-units?
Yeah, so that's actually a great question. Many people don't know that depending on the amount of units associated with the property, the down payment requirements are going to be different. Now, this is where the FHA loan can become very favorable because for a duplex, like a 2-unit property, for Fannie Mae, Freddie Mac conventional loans, the down payment requirement jumps from 5% to about 15% down. But with an FHA loan, you can actually still put as little as 3.5% down and buy a multi-unit property. And the cool thing too is we can take the rents that you would earn for the other units you're not living in and count part of that towards basically offsetting that bigger mortgage payment associated with the multi-unit property. So condos, one thing that we do have to check for, and FHA and conventional both are across the board are the same, but basically we just need to check into the HOA to make sure that it's being managed correctly, because when you purchase a condo versus a single family home, the structural integrity of the condo project itself is managed by the HOA. And I don't know if anybody remembers the crazy news that happened in Florida a few years back when that huge apartment building started crashing down. Did you hear about that by
I
chance?
did, yeah. It was wild.
So that was actually a big cause for why they started checking into it even deeper than they used to. But anyway, long story short, with condos, we just have to make sure that the condo project is eligible for conventional or FHA financing. FHA loans, you do have to actually have that condo community within a list of FHA approved condos. Conventional does not have that. However, we do still have to make sure that, the budget's all good to go. They have plenty of reserves, and make sure there's no litigations or any owners suing the HOA for anything wrong with the structure of the property, because that could eliminate that property and that condo project from being allowed to have conventional loans funded upon within them.
Okay, so if you are looking to go FHA, you got to make sure it's an approved property.
Exactly. And that's where, make sure you're working with a lender that's involved throughout your home search. At least for me, I always break down different structures and payments for any clients, for any properties that just pique their interest. But if they're looking into an FHA loan, that's one of the first things you should check for, making sure that that community is eligible for FHA financing.
Yeah. And of course, we're talking about Newport Beach, where $1 million price points, really an entry-level house, believe it or not. Some of these programs might be different, of course, in different states and different counties. But yeah, that's the entry price point. So it is available for people to buy into $1 million price point in Newport, Orange County with low down payments. It's good to know.
Yeah, and on top of that, like you probably noticed, with a good credit score, the mortgage insurance is not that scary. When you think about having 50 grand to put down for $1 million property, or having to save an extra $150,000 while paying rents, while the rents are going up and the cost of everything's going up, and the price of the property continues to go up, it becomes like a never-ending rat race.
Yeah.
But yeah, you could definitely get in with a lower down payment. And overall, the best thing about real estate is the concept of leverage anyway. What other asset class can you put 50 grand of your own money into? And now you just turn that into a $1 million investment, and any appreciation rate of returns based on $1 million with just 50 grand you put in. That's pretty insane.
It's incredible, actually. Can you buy down that? Can you buy off the mortgage insurance if someone wanted to? Could you pay it off up front?
Yes, you can. And actually, I'm really glad you asked me that because, mortgage insurance for conventional loans specifically, there's a few ways you can go about paying it. Now, many people, of course, are familiar with the monthly option. And I will warn everybody, any online calculators are going to just automatically pull most likely FHA loan mortgage insurance. So that could look very inflated if you have a good credit score. Now, with a conventional loan, rather than going with the monthly option, you also have the option to buy out your mortgage insurance up front. So it's a single premium due at closing, and it is the tax write-off for the year you purchased the property, by the way. But all the factors that go into, I guess, how much that would cost for you depends on the down payment, credit score, DTI, a lot of those factors. But assuming great credit scores, again, mortgage insurance for $1 million property at 5% down, if you want to get rid of it entirely, would be $7,200 up front. Again, tax deductible that year, and much, much better than trying to save $150,000 more just to avoid mortgage insurance. You can just simply buy it out up front.
Okay, not bad to know and not a bad option.
Yeah, definitely. These kind of more creative ways we can structure the loan. When you compare an extra $7,000 going towards the down payment, maybe it'll impact your payment by $25-$30 a month. But if you were to apply that towards getting rid of your mortgage insurance, boom, your payment goes down by $135 a month.
Well, there you go. You can get into $1 million price point here in California for relatively inexpensive. So don't sit back on the sidelines, jump in the market.
Yeah, and just ask the questions. Really, It doesn't hurt to ask the questions. I know many people feel like they're fearful of being judged if they don't know enough or they might not qualify, but it's more of a conversation with a lender, if anything. And for me, at least, that's how I go about it. So definitely don't hesitate to reach out and ask the questions, because even if you're not ready short term, you may get ready sooner if you actually have full clarity on what exactly the banks are doing when calculating everything out. So have your discussion with Team Kiwi, myself, or anyone. Honestly, just ask the questions. I think is the biggest recommendation, suggestion for everybody.
So true. I couldn't agree more. Jump in there, ask your professional, get in touch with them, even if you're not ready to buy just yet. At least you'll be educated and you'll know where to start and you'll know where you're going and you'll have clear direction when you find that right house. Because a lot of people jump in the market in this price point and they're just looking on Zillow, looking on our updates, doing whatever, but they haven't done the right steps to actually get prepared, approved, and ready to purchase. And all of a sudden the right house comes up and they miss out because they didn't have their pre-approvals, they didn't understand the process, they didn't understand their options. So yeah, definitely get in touch with a professional like Mina or ourselves. We can help direct people to you. But yeah, the more you know, the better off you'll be and the more prepared you'll be to purchase that house.
Yes, couldn't agree more.
Thank you, Mina. Now, if you want to learn more about how to buy $1 million home, then click on the video on your screen. We'll go deeper into the topic and we'll provide some useful tools that'll help you live your best life in Newport Beach. So click on it now and we'll see you there.